Stocks trade ranged ahead of the consumer inflation prints and the Federal Reserve monetary policy action. That's tomorrow. Metals lead the gains today while oil and gas and capital goods drag.
Infosys CEO Nilanjan Roy resigns, adding to the growing list of exits from the IT major in the past year. The unexpected exit puts the spotlight on the growing migration of senior-level executives from IT majors.
Banks make a beeline for the QIP window as strong demand for recent offers suggests a big appetite. After Bank of India's well-bid offer, J&K Bank's QIP draws a heady response and more offers are in the pipeline.
And Dixon Technologies jumps on signing up Lenovo, and BLS International gains on bagging the Indian High Commission of Canada contract. But Mankind Pharma slips after almost 9% of its equity changes hands in a big block deal.
India's retail inflation expected to inch up largely due to the higher food prices and spike in prices of tomatoes, onions and other cereals. A CNBC-TV18 poll sees November headline inflation at 6%. Factory output for October will be also seen released today and is expected to come in at 10.5%. Hello and welcome. You tuned into Business Lunch. I'm Nisha Podar. With me, as always, is Pavitra Parekh. Pavitra, looks like the market has already checked out for a holiday season. You're seeing such a tight range, kind of a flattish trade. Now, of course, at lunch hour, it's like showing sluggishness. And with Nifty 50 clearly in the red right now, 20,966. And this, remember, after it had opened above the 21,000 mark. So it's a very tight range in which the market is operating, and some of the big boys like Reliance Industries, HDFC Bank, they haven't been supporting, and that's also one of the big reasons. When we talk about Sensex, well, 145 points down at the moment. Bank Nifty is the one with 0.2% down. So all in all, pretty much the picture is the same, in line with the key indices, mid caps as well as Bank Nifty is also behaving right now. An advanced decline ratio pretty much neck and neck with a slight tilt towards the advances. So that's the overall picture looking like. But some of the IT counters are having a good day of trade today, Pavitra.
Nisha, I think you got very used to the November last week kind of move, where we saw 1,000 points in 7 days. So you think the market is checked out. But you can't possibly see that, and some consolidation at these levels is perhaps to be expected as well. Today, yes, you have seen quite a fall from the high. So the mid-cap index is down around 300 points from the high point. The small caps are still holding up. And, today it is the stocks which have run up a lot, which are just pulling back a bit. So the PSU stocks, the real estate stocks, nothing alarming, but you're seeing some cuts in BPCL, NTPC, Coal India, those kinds of names. The real estate pack will also be on your screen. But on the other hand, there is a lot of action. Names like IREDA once again up 15%. So that stock continues to rally. J&K Bank, Safari, BLS. So there's a lot of action, beneath the surface as well, which I think it's important to highlight. Also, this is a day when there are a lot of important cues. You have India's own macro data, which is expected to be out. You have the US CPI expected, and then the Fed decision tomorrow. So maybe some caution ahead of that as well. But let's kickstart the show now by talking about those important macro cues. Today, we will get India's CPI inflation data as well as the IIP data. So Lata is joining us now to take us through what we can really expect in terms of the numbers. Lata.
Yes, our poll threw up a number of 6% inflation for November, which is bad, considering that October it was 4.96 is also bad because it's the upper limit of the mandate given to Reserve Bank, which is 4% plus or minus 2%. So you're reaching the upper limit. But the point is the Reserve Bank had admitted that November and December are going to see high numbers. Did you see the year-ago number? It was 5.88 on the chart. So, per se, a 6% over last year's 5.9 is not looking good. It looks like a steady 6% growth. So, this number is a little uncomfortable. But the culprit perhaps will soothe some feathers. The culprit is food inflation largely. Food inflation is expected to come in at 8.6% compared to 6.61 last month, and a year-ago number of just 4.67. So this is what is biting We thought food inflation had receded after we saw the tomato price rise, but it's not going away. Let me first just give you the good news. Core inflation is the one that's the redeeming factor. It's down to 4.25. Even last month is what, 4.2. A steady fall cannot be expected. Look at the year-ago number, 6%. We were at 6% even in early Jan, Feb, March, but now receded to 4.2. Perhaps, that's about the lowest it gets. We'll have to wait and see. So the November headline inflation going to 6 is almost entirely because of the food prices and to onions, we have added tomatoes. They have bounced back in terms of prices. Pulses were, about 13% higher even last month, and cereals. Both these are heavy elements in the food basket. So that they are higher is obviously pushing the entire food basket. Today, we will have to see if the inflation number comes above 6. It would be bad for the bond markets. But the controlling number will be the CPI number that comes after the CPI number, which is the US number. That's expected to come, according to market estimates, at 3.1. 3.2 was in October and 3.7 in September. So if that trend is followed, it would be 2 months in a row that US CPI has fallen. That will greatly, increase chances of, or at least hopes of a rate cut. But we will have to see. Will we be twice lucky? We have to wait and see. The other number, of course, is going to be the industrial output number. Our poll threw up a number of 10.5%. But don't be too exhilarated. Just look at the year-ago number, minus 4.1. So basically, it just has to be 6% plus flat, and you will get a 10.5 number because the base is taking away minus 4. Those are the numbers we are waiting for at 5:30 p.m. today.
All right, Lata, thanks so much for giving us a heads up on some of the key macro data that we are watching out for. But India's CPI is not the only one. Even global investors are looking ahead to the US inflation data due tonight and also the two-day FOMC meeting that begins later today. And the Fed is expected to maintain the Fed funds rate steady, while Fed Chair Jerome Powell is also expected to reiterate his comments at lowering inflation. So those are the important data that we all will be watching out for and markets would be reacting to tomorrow. Take a short break on that particular note, and when we return, we'll focus on Infosys that has seen a series of top executives exits over the past 18 months. More on that when we return. Stay tuned.
Welcome back to Business Lunch. Let's now talk about Infosys. The company has seen a whole series of exits in the top-level management during the last 18 months. So Rima is here to tell us more about that. Rima.
Thanks so much for that. So Infosys has indeed seen a wave of senior-level exits, the latest one being Nilanjan Roy, who was the CFO of the company since 2018, and he's decided to step down to pursue personal aspirations. Jayesh Sangrajka, an Infosys veteran of 18 years and previously an EVP and Deputy CFO, will now assume the role of CFO at Infosys. Now, the last 18 months have seen many large exits, in fact, 9 senior-level exits. Quite surprising for a company like Infosys, where employees prided themselves on being Infosians for life. But what we found interesting is that out of these 9 recent exits, 5 of them went on to lead other large companies. And that's quite incredible and says a lot about Infosys, the training and the leadership. So to quickly jog your memory, the most prominent ones were Ravi Kumar, who was the president at Infosys. He's now leading Cognizant, and Cognizant is a $20 billion top-line company, comparable to that of Infosys. Mohit Joshi was also a president at Infosys, and he's replacing C.P. Gurnani at Tech Mahindra. You've got Vishal Security, who previously was the heading cybersecurity practice at Infosys, has gone on to become the CEO of Quick Heal, a listed Pune-based cybersecurity firm. And then you also have Kapil Jain, who is now the MD and CEO of eClerx, and Charles Salema, who is the CEO of Sangoma Technology, which is one of the largest network and IT security firm in Canada. I'm sure the feeling is quite bittersweet. One, you're seeing your prized assets personnel leaving the company, but there is also a feeling of pride. Here's what Salil Parekh had to say when he was questioned on the exits at the AGM in June earlier this year. We're extremely solid in terms of the bench strength of the leaders that we have, and we feel that the group of leaders that Infosys has produced over the years through its own leadership development and through the work they do with clients and delivery in markets really prepares them to do more and more work. And we've made sure those leaders step up and take that on. We feel good about the fact that we have such a deep leadership bench, and we will continue to work on that as we go ahead. In this statement, Salil Parekh is also dismissing any concerns that investor shareholders might have had about losing so many top-level employees impacting the business. Now, finally, what do analysts make of today's development? Morgan Stanley has written a note about today's CFO stepping down. He says it's unanticipated, it could weigh on the sentiment, but they believe that there will be a smooth transition. There was another one, Kotak, and this is a report dated 12th of October 2023. They go on to say that such departures are common, but the surprising element is the bunching up of exits. They believe the company has good leadership bench strength, and according to Kotak, the two aspects to watch out for are, one, the senior leaders that have departed recently may tap into the in-feed talent pool, and secondly, the impact on the existing business due to the departures of key leadership. The key leaders who were leading these accounts need to be watched out for very carefully.
All right, Reema, very, very interesting account of very many exits from Infosys, and it's a big change at the top brass there. Moving on then, while the Tamil Nadu government keeps counting the losses from Cyclone Meghjuam, well, there are indications that Chennai's worst flood in a few decades may have impacted the state's MSME sector the most. CNBC-TV18's Jude Sanad joins us now with all the details and the aftermath of the storm. Tell us, Jude.
Well, what we are picking up from the ground is that Tamil Nadu government continues its impact assessment and the state continues to pick up the pieces. But even as this assessment is underway, there are fragmented reports of just how impactful Cyclone Meghjuam was and of all the damage that it's left in its wake. Firstly, let's start with what the Tamil Nadu government has said with regard to the impact that the cyclone may have caused on the MSME sector, which, remember, comprises largely of auto ancillary industries, mostly in and around Chennai and its suburbs. In all, 4,800 MSMEs, the government says, across 24 industrial enclaves have been affected. Of these, 2,100 have been gravely affected in and around districts like Chennai and its three surrounding districts like Kanchipuram, Chengalpet and Tiruvallur. Mostly the damage has been caused in industrial enclaves in areas like Ambattur, Vichur, Vilivakam and Perungudi. Now, what we are picking up from the ground is that a total damage of nearly 3,000 crore rupees may have been reported from just about 6 industrial enclaves alone. 2,000 crore of this, in fact, is in the Ambattur industrial estate, one of the backbones, really, when it comes to the auto ancillary industry here in Tamil Nadu, even as the Perungudi industrial estate may have suffered a loss of about 400 crore rupees. The Tamil Nadu Small Industries Development Corporation, a TANSIDCO's industrial estate in Vichur, may have suffered a damage of about 160 crore rupees. But this comes even as the Tamil Nadu government is yet to submit its final assessment of the total damages incurred by way of the cyclone itself. Remember, this number could go up given that a lot of damage assessment, a lot of insurance surveys are still on. But on to the good news now. The fact is most of the larger industrial enclaves are back up and running with some bigger names like, the Hyundai Motor India Limited, Daimler India Commercial Vehicles, and then several of the TVS Group's companies, in fact, although suspending operations for a bit on the days of the cyclone, are back in operation. The same goes for many IT parks and global capability centers along the IT expressway in Chennai, all back open after a 2-day break. Remember, iPhone manufacturing saw a bit of a halt at Foxconn and Pegatron plants here in Tamil Nadu, but that's back as well. So while some of the larger industries are back on their feet, the bulk of the damage has been felt by the MSME sector, which suffers upwards of about 3,000 crore rupees in damages, at least as far as initial estimates go.
All right. Thanks a lot, Jude, for getting us all of those very important details. But with that, it is time for a short break. When we come back, we're going to bring you lots more news and updates. Stay tuned for that.
Welcome back. You're watching Business Lunch, and as we wind down on the show, let's take a look at the market. Nifty 50 is same 0.15% down, 20,965 points, 158 points lost on Sensex at the moment, and Bank Nifty as well as mid-cap also trading cautiously in the red. Now, looking at some of the counters which have gained in the last few minutes of trade and doing well despite a sluggish frontline indices performance. Well, JB Chem is one such counter owned by KKR. Remember, it was sold to this private equity firm. It's doing well today. Z Entertainment, take a look at that. 52-week high. It touched 299 levels today. Has seen some profit booking, but still maintains good amount of gains. Sundaram Finance is another such gainer in trade at the moment. So that's like the synopsis, and those are the stocks on my radar. So Pavitra, looks like sluggish on the key frontline indices, but lots of stock-specific action there.
Oh, absolutely. It's an interesting screen, right? And lots to track, like you mentioned. But on that note, we're going to wind down on this edition of Business Lunch. Thanks a lot for tuning in. We have Mid-Cap Radar after this short break.